Okay, let's dive straight in. Today, our focus is Hero FinCorp. Now, that's a name you might recognize, mainly thanks to its connection to Hero MotoCorp, the big two-wheeler giant.
Right.
But we're not really talking bikes today. It's about their financial arm, which is growing, well, incredibly quickly. And what that tells us about the Indian financial landscape overall.
Mm.
So our mission here, it's really to unpack their business model, look at that impressive growth, but also, the potential potholes and what the future might hold, especially that potential IPO everyone seems to be talking about.
Yeah, that's definitely creating some buzz.
Exactly. We're looking at their whole range, the standard two-wheeler loans, of course, but also personal finance, business loans, used car finance, even loans against property.
Quite a diverse portfolio they've built.
It really is. And their reach is pretty undeniable now, something like over 4,000 touch points across India as of this year. That's wide.
And what's immediately striking, I think, is how they've leveraged that Hero MotoCorp brand recognition. It's not just a familiar name. It's this pre-existing level of trust. And in the financial market, that's incredibly valuable, right?
Absolutely. Gold dust.
They started, primarily as a captive finance arm, mostly for people buying Hero motorcycles. But their expansion now really shows a savvy understanding of broader market needs. They saw something bigger.
Yeah, they've clearly seen an opportunity way beyond just, financing their own bikes.
Yeah.
So looking at their financial performance, the growth is, well, it's hard to ignore.
It really is.
Their assets under management, the AUM, it shot up from under, 10,000 crore to around 40,000 crore in FY23.
That's a massive jump.
It is.
Yeah.
That kind of leap in such a short time,
Right.
it does raise some interesting questions about what's driving it.
Well, that kind of hypergrowth, especially in the last few years, it strongly suggests they likely tapped into some unmet demand in specific lending segments. Maybe they were just quicker, more agile in their underwriting compared to the more traditional players. That could have allowed them to really capitalize on emerging needs.
And it's not just the sheer volume of loans, right? Their profitability seems pretty robust, too. Their net interest margins, or NIMs, they're reported somewhere in the 6% to 7% range. Why is that considered a healthy figure for an NBFC?
Okay, so that NIM band, 6-7%, it's healthy because it gives them a crucial buffer. I mean, It needs to comfortably cover their borrowing costs, their operational expenses, and really importantly, absorb potential credit losses.
Right, the defaults.
Exactly. And for an institution like Hero FinCorp, which doesn't take deposits, maintaining strong NIMs is just vital for sustainable growth and, being able to reinvest in the business.
They also seem to be prioritizing security in their lending. Lots of focus on loans backed by actual assets. That probably helped keep their non-performing assets, their NPAs, in check. It feels like a more cautious approach.
Precisely. Secured lending inherently carries lower risk compared to unsecured loans. So that strategy, it doesn't just protect their bottom line, it also makes them a more attractive prospect for investors. It signals a certain degree of financial prudence.
And speaking of investors, that recent funding from Carlyle Group and Christ Capital, that feels like a pretty significant endorsement, doesn't it?
Oh, absolutely. It's a strong validation of their business model, their future potential, coming from experienced financial players.
Because these firms do serious homework.
They conduct extensive due diligence, yeah. So their investment basically indicates real confidence in Hero FinCorp's strategy, its management team, and, well, its growth prospects. Plus, it gives them more capital to fuel even more expansion.
Okay, let's maybe switch gears a bit and talk about the business model itself. Their strategic focus on Tier 2 and Tier 3 cities is quite interesting. What's the thinking there? Why focus on those markets specifically?
Well, these markets often represent a really significant opportunity, mainly because they tend to be underserved by the traditional banking institutions.
Less competition.
Less direct competition, and a large population with growing credit needs. So Hero FinCorp is basically positioning itself to be a key player in meeting that demand.
Right. And that built-in synergy with the Hero MotoCorp dealerships must be a huge advantage in reaching those customers. It's almost like a captive audience for their two-wheeler loans, isn't it?
It's more than just a captive audience. It's a really powerful distribution channel that already has established trust.
Sure.
I mean, think about it. Someone's already at a Hero dealership, maybe buying a bike. Considering a loan from Hero FinCorp feels like a very natural next step. It streamlines the whole customer acquisition process and definitely reduces costs.
Makes sense. And they're also investing pretty heavily in digital lending platforms, aren't they?
Yeah.
Especially for things like personal loans, consumer durables. How does this digital push fit into their overall strategy?
So the digital route, it offers several key benefits. One, it enhances customer convenience. People want things fast now.
Yeah.
Two, it speeds up the loan processing time dramatically. And three, it significantly lowers their operating costs compared to purely physical branches.
And reaches a different demographic, maybe?
Exactly. It allows them to tap into a younger, more digitally savvy group that might not be as inclined to, walk into a physical branch for everything.
Okay.
Yeah.
But of course, being an NBFC, it's not all smooth sailing. There are challenges. That liquidity crisis we saw with ILNFS back in, 2018, that's a pretty stark reminder of the vulnerabilities. How do NBFCs generally manage this risk?
Yeah, the ILNFS situation was a wake-up call. Liquidity management is just paramount for NBFCs. They absolutely need to ensure they have consistent access to funding sources, diverse sources, ideally, and can effectively manage their cash flows.
Especially when things get rough.
Especially during periods of market volatility or economic downturns. That situation really underscored the potential systemic risks if liquidity isn't managed incredibly carefully.
They also have pretty significant exposure to rural credit risk, don't they? Through those two-wheeler loans and the loan against property segments. How susceptible are they to, say, fluctuations in rural incomes?
Very susceptible. I mean, economic conditions in rural India, which can be heavily influenced by things like agricultural output, monsoon patterns, government policies, they directly impact the repayment capacity of borrowers in those sectors.
Right. A bad monsoon could mean trouble.
Exactly. Any significant downturn in the rural economy could potentially lead to a rise in NPAs for those specific loan segments. It's a key risk factor.
And then there's the competition. The lending space is just incredibly intense right now, especially with these new age fintech players popping up like CreditBee, Navi, Paytm. What kind of threat do they actually pose?
Well, these fintech companies are generally very agile, very tech-driven, and often have much lower overheads. They can offer innovative products and, crucially, faster, more convenient loan dispersal processes. That definitely puts pressure on more traditional NBFCs like Hero FinCorp to constantly adapt, innovate, and enhance their own digital offerings and overall customer experience. They can't stand still.
No, definitely not. Now, for many of us listening, direct investment in Hero FinCorp isn't actually an option right now because they're not listed on the stock exchange. The only real connection is, maybe indirectly, through Hero MotoCorp shares.
Right.
Which naturally brings us to the big question everyone's talking about, that potential IPO.
And that lack of direct access for retail investors is precisely why there's so much interest around a potential IPO. It would suddenly open up a new way for a much wider range of investors to actually participate in their growth story and, potentially realize value.
There's definitely a lot of speculation, maybe an IPO by 2025 if they do go public, and assuming they can maintain this kind of growth. What could that mean in terms of value unlocking?
Well, an IPO would do a couple of things. It provides an exit route for existing investors like Carlyle and Grace Capital, potentially. It raises significant capital for more expansion. And yes, if the company continues on its current growth path after listing—
Big if.
Big if, absolutely. But if they do, it could indeed lead to significant value unlocking for new shareholders. However, sustaining that kind of growth momentum once you're in the public market environment, with all the scrutiny that brings— that's the crucial challenge.
And that trusted Hero brand name back in the financial services sector, that can't be overstated, can it? It must give them a real leg up.
Oh, absolutely. In financial services, trust and reliability are just paramount. That established goodwill associated with the Hero brand provides a really significant advantage in attracting customers, retaining them, especially as they expand into new products in new geographic areas. It smooths the path.
Looking ahead then, their growth seems really closely tied to just the increasing demand for credit across India generally, particularly in those MSME and rural segments you mentioned.
Yeah, I think that's right. As the Indian economy continues its growth trajectory, the demand for credit, especially from small and medium-sized enterprises and in rural India, is expected to rise quite considerably.
Huge potential market.
It's a vast addressable market for Hero FinCorp, definitely.
Yeah.
Provided, of course, they can effectively manage the risks we talked about and handle the competition.
And their strategy, those investments in tech, combined with that significant physical presence through the 4,000 touch points, it feels like a pretty well-rounded approach for scaling efficiently, that hybrid model.
Exactly. That hybrid model, combining the reach and, crucially, the trust of a physical network with the efficiency and convenience of digital platforms. It seems like a very smart strategy for reaching a diverse customer base and achieving sustainable growth in a country like India with its unique characteristics.
Okay, so wrapping this up,
Mhm.
the key takeaway here seems to be that Hero FinCorp is this rapidly expanding NBFC. It's leveraging a really strong brand name and a smart hybrid business model to tap into India's growing need for credit. They've shown truly impressive growth, but like all players in the financial world, they face those inherent risks, liquidity, credit risk, and definitely increasing competition. So for anyone out there tracking the Indian financial landscape or maybe looking for potential future investment avenues if that IPO happens, Hero FinCorp is definitely a company to keep a close eye on.
Indeed. I think their journey provides a really compelling illustration of the dynamics at play within India's non-banking financial sector right now and the potential for, well, pretty significant growth within this space.
Right. Okay, now final thought for you, the listener, to maybe mull over.
Yeah.
Given Hero FinCorp's success in taking a well-known brand from one sector, two-wheelers, and extending it into financial services, particularly in those less saturated Tier 2 and 3 markets, what other established Indian brands, maybe from completely different sectors, might be strategically positioned to make similar moves? Who else could leverage their existing trust and reach to capitalize on the growing financial needs in these regions? Something to think about.